In the studio is Andy Shea. Andy is an independent economist. But what have you made of all this, Andy?
Well, I think that it shows Chinese characteristic in handling a downturn. The market, the government basically thinks that if the market goes down, people will lose hope. Then it's going to be very difficult to revive. That's a unique Chinese interpretation of how an economy works. So yesterday they kind of sent the police out to catch malicious short sellers, and that was the news. That was something new, and then turned the market around. You know, at some point the market will rebound. You know,
well, it's rebounding the last couple of days. I mean, yeah. So, but how long does it last for? I mean, I know you're an economist, but you have a theory on this.
No, I think sometimes the rebound could be half of the decline. It could be as big as half of the decline, and then it goes down in waves. So it could last for a while. Right,
it could last for a while, but with half the stocks on the Shanghai market, or the entire stock markets of China suspended, what kind of message is that sending out for people who want to do business there?
I think China's stock market is still very immature. It's far from what it should be, and the government has been talking about more and more towards a market force determining resource allocation.
Yeah, absolutely. Those pledges coming from Xi Jinping.
That has not been implemented.
Right, but don't those pledges actually remain, as you say, unfulfilled, but at the same time, don't they lie in tatters here as well?
Yeah, I think a lot of measures in the last few days kind of really moved the overall direction backwards. And the government people usually think that, there's a fire going on. Let's worry about all those big issues later. Let's get the market back up again. Yeah. That seems to be the driving force.
Andy, what is this concept that you're talking about here? That in the stock rally, not many people, you say, took part in it, and you talked about a unique Chinese term called pianzi.
Yeah, it's a swindler.
What does it mean?
In the 1920s, the U.S. market was manipulated by all these pump and dump guys before the government started to regulate the market, and they say organize trusts to pump certain stocks. In China, it's become ubiquitous. The extent is far greater than what had happened in the United States.
So you go pump and dump people, but you're saying that not many ordinary people were talking about it.
Yeah, it's been going on for 20 years, you know. Then more and more people joining the dark side. And the people are losing money quicker than, every cycle you lose money quicker than in the previous one. So this time around, people with the real cash didn't really join. You see all the pictures of the people going in there. These are really like a lot of young people who just got their first job and not much money. So why this market has been so dependent on margin loans. The brokers reported like 2 trillion, but on top of that, there could be another 4 trillion from other sources. So you compare to the overall market size, in particular to the share of the stocks that are liquid, even at the top of the market, it was sort of like a, what was that? It's about 20% of the market cap of liquid shares. So this market has been pumped up not by real money, it's been pumped up by the loans. And the loans are borrowed by those guys who've been pumping. So at the end of the day, they look around, all people are like them. So what are you going to do? So you keep doing that and borrow more and hope one day the real money will...
Right, Andy, but I mean, you're saying that the financial problems are there, and you're suggesting that this could all really represent... Well, let me just quote you. Say the chances are that China's financial crisis has begun.
Yeah, it's been going on for a while. I think that the property market really burst a couple of years ago, but it's been kind of covered up by the financial system not foreclosing on default developers. And the stock market rally has raised the hope that these developers could somehow get money from the stock market, so everything would be fine. But the stock market is small compared to the property market. China's debt is like 200 trillion RMB, and the stock market at the peak was like 6 trillion. So the big game is not the stock market. The big game, the stock market offers the hope that if they kept on going up, it would bail out everybody.
But so then, if this financial crisis has been going on for a while, tell me, how bad are things in China at the moment? How bad is the economic slowdown, for instance?
I think that it's fair to say most developers are technically bankrupt. And the property development, at the top, the sales were like 15% of GDP. Even like when you look at Shanghai and Beijing, where market's supposed to be very good, that's what people think. But the sales are down like 70 to 80%.
That's the property market, but what about the economy itself?
The economy, the property market has been the driving force in credit allocation, because through higher land price, you could allocate credit, right? So that's why the economy was rising very rapidly. Things like you look at the electricity production, it's been during these 12 months of the stock market boom, it's been like sliding. Now it's like a flat. You look at whatever commodity consumption is down. Chinese imports are down like the double-digit rate. Exports are flat. And you look at the freight traffic in China, rail freight traffic is down. So it's difficult to see what's going up, right? So what the stock market did was to raise hope. Something was going up, and it would keep going up. Eventually, it would pull everything up. That hope was dashed a few days ago.
Andy, thank you very much indeed. Andy shared that. Right, we're going to tell you about